Hello everyone, this is Ross with Market Traders Daily, and this is today's video analysis for November 8th, 2019. Today we're looking at the AUDUSD, the Australian, versus the US dollar for today's trade analysis. Now we looked at this currency pair earlier this week and studied the two different trends that we see here on the chart. I'm actually going to go to the weekly time frame, zoom in one time. The black trend line, of course, representing a long-term downtrend, the potential for reversal as we look for similar things to happen that happened the last three red trend lines. Came up to the black trend line, reversed and went down, new low. Up to the black trend line, reversed, went down, new low, and it continued to happen throughout the life of this black trend line. So then we looked earlier this week at the fact that we were challenging that black trend line again over the past couple of days. And the fact is, it could find resistance there and do the same thing it did the last three or four times, turn around and make a new low. If that's happening, we want to be able to take advantage of it. But we also note that in most recent days, we've seen an uptrend. That's the blue trend line as the market has pushed higher from the 66.75 level at the bottom of the blue trend line into current market high 69.25. So two different trends, long-term downtrend, black trend line, rising blue trend line. Today, we're going to work with the blue trend line because the market is falling into and finding support near that blue trend line, which is 0.6865, 0.6855, the yellow shaded area that you see here on the chart. A couple of things about that yellow shaded area, and I'm going to put a couple of circles here. Right here, we found resistance. Right here, we found congestion and resistance. So the two blue circles show historical market price action around this yellow shaded area. So we know with some fair confidence that this is going to be a decision zone. It's going to be a place where, with the trend line not too far underneath it, is the 100 period moving average, historical resistance, that we're going to find some support here. How much support remains to be seen, but we will find some support here between 68.65 and 68.55. The other side of that story is that the market continues to be bearish. It breaks through that yellow shaded area and continues to go lower. So we know what the risk is. That's what I'm trying to get to here, is that yes, we have an expectation of potential buying support at 68.65, but we also know the risk is it breaks through there and goes lower. So we have a known risk and a potential entry. First things first, though, you think about your three trading decisions: buy, sell, or no trade. Should you sell it right now? Well, I don't think generally most people are going to want to sell at the lowest price. Remember, buy low, sell high. So you're not generally going to want to sell at the lowest price. So here we are at 68.65, sitting on top of the trend line, sitting on top of the yellow zone, and close to the 100 period moving average. Doesn't really give me high confidence to be a seller. But in this case, we're looking for potential support and the possible bounce back higher again, with our risk clearly assessed underneath the yellow shaded area, probably close to the 68, 40, 45 zone, which only means we're looking at 20, 25 pips of risk. And I would say easily we could target back to today's high, the purple zone, or potentially higher, back to the black trend line or higher. 4 hour time frame. Here it is here on the 4 hour time frame, not too hard to see. Not only do we see historical resistance around this area before, we see some congestion here, and not too far ago, we see some support here. So we again know that this yellow zone is a significant decision point where the market's had decisions to make: buying, selling, entering, exiting, congestion. It's done that here before. So here we are again, 68.65. Again, worst case scenario, we see a breakdown of here. So we're going to place our stop loss underneath the yellow zone if you decide to take a long here into the yellow shaded area. And look for it to bounce back higher. Blue zone is your first initial area to target, 68, 65, 85. Which is not extraordinary profit, so that's why we're going to also target the purple zone and maybe even the green zone as our next two targets higher, with our risk clearly under the yellow zone. Now, if you want to be a seller, I don't think this is the place to do it. I think you would at least want it to be back in the blue zone, if not higher to the purple zone like it was up here. Or I suppose the next action you would look for would be the breakdown under the yellow zone. That would be your next opportunity to go short. So until it does that, breaks the yellow zone or rallies back into resistance, there's no real reason to be short or sell this. I think we're more in line with being long into the yellow shaded area, the blue trend line, for the Australian dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.